Sims Metals Management. Are you as convinced that the market will agree that perhaps the worst is behind this company? Out with a very messy result this morning.
A very messy result, but hopefully the worst is behind Sims Metals. Now today we did hear that the first half net loss came in at $296 million. Now that's due to impairments and write-downs in the company. If we have a look at the underlying profit, that actually came in at $10 million, but revenue had fallen by 25%. So its business has been under pressure. So revenue coming in at $3.4 billion, and not surprising to see that no dividend is going to be paid. Now in terms of the underlying business first, we know that there has been a depressed market, especially in the deep sea ferrous scrap market, and so we are hoping to see a bit of a recovery in this area. And really, if you're investing in Sims at this stage, it's because you see a turnaround, and a turnaround could be pushed along by a recovery in the US housing as well as rising demand for auto sales, and that would be seen as a positive. This result is a very bad one, but most of it due to impairments and write-downs. If we have a look at what's been happening with Sims, they've had to readjust their inventory expectations. So in the first half, we have seen an impact there from inventory of $16 million, and then we've also seen some goodwill adjustments as well, and massive goodwill adjustments for the full year, $291 million coming through from its North American business, and then another amount coming through from its UK business as well. So Sims Metals coming out with a big loss today. The underlying profit result, $10 million. Its CEO, it looks like a casualty of some of the bad news that has been hitting the company over the last year. And investors really, if they're getting in on this company, which has come out with a bad result, what they're hoping for is all the bad news to be behind this company and looking for brighter days, and a rising demand for autos as well as housing in the US may be a catalyst there.
Julia, we're just seeing Santos's numbers dropping, full year profit coming in at $519 million. That's down 31%, so missing expectations quite significantly. I think we were expecting a 50% jump in full year profit.
If we have a look at expectations, consensus was at $592 million. So if we have seen the underlying coming in at $590 million, that would be around expectations. We weren't really expecting to see much in terms of surprises coming through from Santos, because we do get the quarterly production results. And we know that Santos is still reliant on its traditional Cooper Basin assets. What we have seen are some new projects coming on stream, Reindeer as well as Chinseo, and so that's helped its production profile. And in fact, we should see a record revenue there, because we have seen relatively high oil prices as well as rising gas prices domestically. So we are expecting to see a record revenue result there. It looks like the net profit result has come in on expectations. But if we have a look at the earnings profile and the growth profile for Santos, it's a pretty flat profile until about 2015, and that's because that's when we see the Papua New Guinea LNG project coming online, and then in 2016 where we're expecting to see the Gladstone LNG project coming online. So really no huge surprises expected in terms of Santos's result. I guess some of the things that the market may be watching are the cost profiles of these two big LNG projects, because as we're seeing with Origin, costs have been rising at this LNG project. But in terms of that net profit result, it does look like Santos coming in line with expectations. The consensus was $592 million. Santos's shares, though, have been underperforming the market. In the past year, we've seen the shares down by around about 17%, but nothing really in this result to change the performance of Santos's share price.
And just finally, Julia, looking at the broader market, SPI futures pointing to a weaker start. After yesterday's sharp pullback, are you expecting the correction to continue into today's session?
It does look like we are set for a deeper correction. Yesterday was a key technical area being breached, that 50% retracement level at 4,986 points. We finished below that. So we now are looking at support at potentially the 50-day moving average, and that's at 4,800 points. We have a look at the last 30-day chart for the Australian share market. You can see it has been extremely positive. That's the pullback that we've seen so far, and we're probably expecting a pullback up to that 4,800 point level. So that would take us to levels that we were at in mid-January. really driving this pullback is once again concerns around global growth, and there's really three things that investors should be looking out for. First of all, there's concern that Europe isn't recovering from its recession as thought. In fact, we saw PMI numbers for both manufacturing and services. They were below expectations. For manufacturing, we saw a read of 47.8. That compares to expectations for a read of 48.5. And for services, it was worse at 47.3. The market had been expecting a read of 49 there. So the first thing is that Europe is still looking a bit shaky. Secondly, the Chinese property curbs, and that's of a concern. And thirdly, still a bit of a hangover from the FOMC minutes at a time when we are seeing news out of China and Europe. I guess the market also focusing that the FOMC may be looking at pulling back on its quantitative easing program. Here domestically, we're still in earnings season, so we'll be watching that very closely. Some of the other results that we'll be watching today are Billabong. We're expecting to hear a bit of an update in terms of its turnaround plan, as well as the takeover offers on the table. But also we're running into dividend paying season, and today we are expecting to see some companies going ex-dividend, and that includes the likes of Coca-Cola Amatil, as well as Fleetwood and Pacific Brands. So that could be a headwind for the Australian share market, but altogether we are expecting to see that deeper correction continuing, especially with those mining type stocks. We saw commodities once again hit overnight. Nickel was down by 3.1%. We saw copper down by 1.2%, and oil prices were down by 2.5%.
All right, Julie Lee from Bell Direct.